Welcome to The Explainer. Today, we're going to look past all the noise and the headlines to really understand the deep currents shaping the 2026 economy. We're going to explore a view that, well, it goes against the rosy picture you might be hearing from the big banks. But first, let's get a key term out of the way. Okay, first things first, you've got to understand what sell-side analysis is. See, when you hear those big banks release their forecasts, you have to remember they're in the business of selling stuff. Financial products. So the research can have a bit of a bias, you know? It's often designed to make you feel optimistic and ready to buy. It's not that it's wrong, but you just have to know where it's coming from.
So what is that official story right now? Well, the big players on Wall Street, they are overwhelmingly positive about 2026. They're predicting a risk-on environment, which is really just Wall Street speak for, hey, now's a great time to invest.
And this really captures that whole sell-side view in a nutshell. The consensus is for the stock market to just keep climbing, all inside this perfect Goldilocks economy. You know, not too hot, not too cold, but just right. They think inflation's been tamed, and the advice is simple: stay in the market. But that's only one side of the story.
Think about it like this. Trying to figure out the economy is kind of like walking through a really dense forest. The sell-side view, that's the path that's right in front of your face. It looks clear for maybe a few feet, but if you want to see the real dangers and the real opportunities, you have to zoom out. You need a map of the whole forest.
And that map, well, it gets revealed when you understand four really powerful long-term forces that are quietly reshaping the entire global economy. These are the deep currents moving way below the surface noise of the daily market ups and downs.
First up, demographics. We are seeing this massive split across the globe. On one side, you've got developed nations with aging, shrinking populations. That puts a ton of pressure on things like pensions and budgets. But on the other side, you have places like South Asia and Africa with these booming youth populations, and that's creating completely new economic dynamics. Second, innovation. And right now, there is one word that just dominates this space: AI. Artificial intelligence isn't just another tech trend, is it? It's a revolutionary force that is changing productivity, job markets, and the very idea of economic value at a speed we have just never seen before.
The third force is the environment. Things like climate change and biodiversity loss, they aren't just social issues anymore. They are fundamental economic risks. They are forcing us to completely redefine long-term stability, our supply chains, and what it even means for an investment to be safe.
And finally, geopolitics. The strategic competition that's heating up between global powers, especially the US and China, is literally redrawing the map of world trade. Supply chains that have been in place for decades are being rerouted. New alliances are forming. The whole flow of goods and money around the world is being completely altered.
Now, what happens when these four massive forces all collide? You get some very strange, very confusing results. And there is no better place to see this in action than in the world's biggest economy, the United States.
And this right here perfectly illustrates the great American economic paradox. Look at the hard data. GDP, jobs, corporate profits. It looks incredible. On paper, the economy is absolutely booming. But then you look at the soft data, which is how people actually feel, and it's the total opposite. Consumer sentiment is negative, and there's just this widespread anxiety about what's coming next. So what on earth is causing this huge disconnect? Well, one really powerful theory points right back to one of our four forces: AI. Think about it. AI is supercharging corporate productivity, boosting those profits we saw, but at the same time, it's creating this deep uncertainty for the workforce. Employees are looking at this tech and they're wondering, what does this mean for my job in 5 years? That anxiety is real, and it is absolutely showing up in the data.
And this divide, it's not just a feeling. It's actually fracturing the stock market itself. The S&P 500 is supposed to be this broad measure of 500 large U.S. companies, right? Well, it's become a tale of two completely different markets.
Get this. For 12 straight years, the value of the top 100 mega companies has gone up, while the value of the other 400 has actually been shrinking. That means all the market strength is dangerously concentrated in just a tiny handful of massive winners. And the engine driving all that concentration is, you guessed it, AI. The tech giants are making an absolutely enormous bet on this technology, and it's turning the market into what looks like the biggest gamble we've seen in a generation.
And I mean an enormous bet. In 2025 alone, big tech companies poured a staggering $349 billion into AI-related spending. things like massive data centers and super specialized chips. That level of investment is it's unprecedented.
This massive spending spree has everybody asking the exact same question. Where are we in the cycle? Is this 1997, the exciting dawn of a tech revolution with tons of room to grow? Or is it 1999, at the crazy, dangerous peak of a bubble that's just about to pop?
And look, while some bulls will argue it's still early days, there are some serious warning signs flashing. User growth for the big-name AI products is slowing down. The mega companies funding this whole thing are taking on 4 times their normal debt load. A lot of this investment is happening behind closed doors in private markets, hidden from public view. And for many of these companies, the actual path to making a profit is still a total mystery.
So, when you put it all together, the economic paradox, this insane market concentration, the great AI gamble, it all leads to one crucial overarching question about what comes next.
You see, for the better part of 2 decades, there has been a clear, consistent winning strategy in the markets. It was almost like a cheat code. You invested in growth stocks, especially US tech, and you put money in the fast-growing markets over in Asia. For a very long time, this trend has been a very good friend to investors.
But there's this piece of wisdom from an old-school investor that feels so relevant right now. He said his mother always told him, when the sun is shining, think of the night to come. In other words, the brightest, most certain-feeling days, those are exactly the times you should be preparing for a change.
And that's the final provocative thought we're left with. After 17 years, a trend this dominant, this concentrated, and this old, it's fragile. It's not your reliable friend anymore. So the real question for 2026 isn't whether the trend will keep going. It's what happens when it finally breaks.